Mr. Chairman. A major problem that has prevented new bank formation in our country over the last few decades is burdensome initial capital requirements, often as high as $30 million when all is said and done. These requirements leave the organizers of a new financial institution with a razor-thin margin of error in executing its business strategy and generating a profit. And that's why we've seen a dearth of new banks and de novo charters in our country over the last decade or so. And that's why I've reintroduced my Promoting New Bank Formation Act, which would establish a 3-year phase-in period for new banks to comply with federal capital requirements and the community bank leverage ratio. Mrs. Romero-Rainey, can you discuss how giving startup banks more time and flexibility to meet these initial regulatory requirements could foster de novo bank formation in rural and urban communities throughout the country? And I would ask you to direct your testimony to my colleagues on the other side of the aisle, including Mr. Vargas and Ranking Member Waters, who have expressed interest in working with me on this issue.
Thank you. I appreciate your long work and engagement in this issue. When we think about new charter formation, as we've discussed here today, the first step is that capital requirement. As I mentioned in my opening statement, my grandfather started a bank with $300,000. There's no way that would happen today, and that's not what I'm advocating for. But those base level capital requirements need to be reflective of the size of the community and the business model that bank would represent. Not only those opening business requirements and capital requirements, but also the business plan over time to allow that flexibility to engage in the business of banking, to retain that local community capital so that it can be deployed in the form of loans and create that source of economic development that is so lacking in so many of our rural communities.
Well, thank you for that. And let me ask a question about 1071 also. The Kentucky Bankers Association created a simple questionnaire explaining the statutory requirement for financial institutions to collect data pursuant to Section 1071 Small Business Data Collection Rule. This questionnaire would allow the customer to fully understand why the data is being collected, removing any uncertainty from the client and easing the potential litigation on the bank. I know there's concerns about another mandate in the final rule that a bank's low response rate may indicate noncompliance, but generally, Ms. Owen, do you think a questionnaire like this would help provide more certainty for your clients? And could it ease liability concerns for your institution?
The questionnaire could certainly help explain more, better define the information that's being requested to the customer. I really can't respond on the liability concerns because I don't know how the regulators will look at it when they analyze the information, and if the customers choose not to disclose and there's few responses, if we'll be forced still to go ahead and comply.
But the data collection requirement under the final rule is pretty burdensome. Would you agree with that?
Very burdensome.
Yeah, burdensome, and I worry that it would force many small banks to exit small business lending altogether. That doesn't help minority-owned small businesses, does it?
Not at all. Most of them have a very difficult time gathering the information that's needed to comply with various regulations.
And one thing that I'll recall from our conversations and debates with the ranking member and other members on the other side of the aisle on 1071 was that they, in addition to Director Chopra, said that this was voluntary. And so if it's voluntary, if it's truly voluntary for these small businesses to provide this data, we want a questionnaire so that they can actually choose whether or not it would be burdensome for them to supply the information or not. Mr. Kennedy, let me shift back to broker deposits following up from Congresswoman Wagner's good line of questioning. How did the uncertainty generated by Chair Gruenberg's push to overturn the 2020 broker deposits rule harm your institutions and customers?
Well, if you ask me the bigger question, really, get to it, is that, frankly, I think that the term broker deposits should just go away. It was really instituted in 1989 to address an ill where banks were buying broker deposits, and we just simply don't have that anymore. We have responsible deposit networks that community banks like ours and many of our clients use to provide federal deposit insurance to customers and institutions in those communities.
My time is expiring, but bottom line, Mr. Kennedy, did the 2020 rule The previous rule, did it improve community banks' access to diverse funding streams?
Yes, it did.
Great. I yield back. Thank you so much.